It's now my very great pleasure to invite our keynote speaker, who is Michael Vrana, who is a senior managing director at Blackstone. And he's going to address the very interesting question, why invest in the UK? Thank you very much indeed.
I have to ask, is it so doom and gloom in the UK that it takes it American on Halloween to answer this question? Let me give you a little bit of background about me first, and then we're going to talk about, obviously, why investing in the UK. So I work at Blackstone. I run our investing business in the UK. For those of you who don't know, Blackstone is we're the world's largest alternative asset manager. And the only one with about $1 trillion of assets under management. I don't mention that to boast or brag, but to sort of contextualize the scale of our operations and to understand why investing in the UK is so important to us. We are fortunate enough to have been entrusted with this much capital over 3 decades. And we are a truly global investor, and the UK is our second largest market globally, bigger than China. And second only to the US. That's been the case for the last 25 years. And most interestingly, over the last 12 months, the UK next to the US has been our largest investment market. On a personal level, over the last 12 months, I've invested, or the firm in the UK, on over £1 billion of deals, and that's since just Trustonomics. So clearly, we still have some confidence here. And why is that? So I want to go through a couple of entry stats on the UK, a couple data points, and then I'm going to discuss sort of our own approach at Blackstone, where we're investing, et cetera. A lot of these facts I'm sure people are familiar with, but I think some of them are good just to all remind ourselves about the UK. First off, and I think probably most important, is talent in the UK. You know, the UK itself is home to 4 of the top 10 global universities. 4 of the top 10, obviously only the US surpasses us. And despite what everyone said after Brexit, not everybody moved to Frankfurt. So clearly people still want to be here. Interestingly, from a rule of law perspective, these are all important things, UK common law actually now governs 40% of all international corporate situations. 40% of all international corporate situations are ruled by UK law. Very interesting. Language, very basic thing. Nearly 2 billion people speak English. It is easily the world's largest language. Very odd one, time zone. It's the only place that you can operate both east and west very easily. Financial services, obviously, given what I do, I have to mention that. It is the #1 international hub for debt issuance, commercial issuance, and currency trading. And it's the second largest global financial hub, second to New York. And again, as I said, after Brexit, nothing happened. I remember a lot of people were talking about that. My view on that was they would have had to at least triple my salary to move to Frankfurt, because half of it would have been lost in alimony. Wouldn't have happened. And then look at the attractive sectors. Life sciences, why we're here today, it's the #1 destination in Europe for inward life science investment. Tech, over the last 24 months, 24 billion have invested in tech investments in the UK. That is bigger than both Germany and France combined. So clearly, a lot of things going on here. Let's shift just for a second. Obviously, yesterday was the autumn budget. I will note before I go into politics, which I'm going to go into it for a second, but despite having lived here for 11 years and having 2 British daughters, I myself have no party affiliation and I'm not a UK voter. But going into politics for a second, it's very interesting when we look at the globe, and when I think back on my career over the last 20 years, when we started investing, or when I started investing, we always had Monday investment committee meetings, and back in the day, 2 decades ago, you started with a macro section, some investment themes, what's happening on the employment side, then you went into the deals, et cetera. Politics might have been 5% of the discussion. this point in time, it's at least the third. 30% of every investment committee discussion is politics, trade, government relations, what's happening. The world has totally shifted. Everybody's now an armchair politician of some repute. But it's important how the world has shifted. So let's look at that just for a second, because I think it's actually very important to what's going to happen here in the UK and its competitiveness versus the rest of the globe in a very positive way. As we go behind the headlines and Labour settling into office, obviously yesterday was a big day. What's really clear is when you look at the other European competitors, where else you could put your capital, and the US, we have a very settled and clear pathway here for at least 5 years, if not 10. And that's very important for investor sentiment, very important for certainty, and that will lead a lot. Dare I say it's an island of stability now, which is kind of shocking given the last couple of years. If you think about it, the Labour majority now, 174 seats. It's the biggest since Tony Blair in 1997 and the biggest seat gain since 1945. They will govern with a very strong mandate. This is going to provide investor certainty. This is very important, very important. You also have very low risk of rebellion, really, within the ranks as of now. Prime Minister Starmer, we think, is going to be able to deliver on a fair bit of his agenda in full, including some of the more challenging ones, this being a real estate sponsored Howard DeWalden estate area. He has a chance of doing a once in a lifetime or once in a generation change to planning reform, which hopefully he gets part of that through. We'll see. But I think he will get a fair bit of it through. And it does mean, though, I think when we look at it, and there were some concerns, especially with Cormid back in the past and everything else, that his oversized majority, though, will not mean that a bunch of left-wing decisions are going to be taking place. I mean, we saw some things yesterday, nothing that scary, frankly. And his ultimate objective and their ultimate objective is economic growth. That was clear. The only caveat to that is they did obviously inherit not the world's best fiscal situation. The NHS is what it is. We will see some relative suffering, as we saw yesterday on the tax side. But none of this is overcomable. And when we look at some of the other areas in the globe, you still have mass political uncertainty in France, populism across continental Europe, especially Germany, a little bit scary. That place is very different growth prospects, totally went off nuclear energy, very different world than it was 5-10 years ago when we talked about Germany, very different. And we have the possible, if not likely, I'm not going to get into it, return of Trump as the US president. So Starmer has a unique position. He can actually present the UK as a political safe haven for 5 years, if not 10, which is very important. And we think that this is going to give business a lot more operating certainty, much more confidence. Shifting gears for a second, want to explain some of the stuff we are investing in here in the UK and Blackstone's presence. And it's going to be a little bit real estate heavy, but we are at the Howard DeWalden estate, and that is what I do. So we remain a very, as I've said, long-term believer in the UK. It has always been one of our biggest places. But just to give you a couple of stats, we've invested as a firm over £60 billion of equity and debt into the UK since 2010. If you add up all of our portfolio companies, we currently have over 40,000 workers employed by us. London is our European headquarters. We have 600 employees. That's doubled over the last 5 years. And as everybody points out to me in Berkeley Square, unfortunately, we took down a very nasty building and building a much bigger one to nicely shadow everybody. But it will be a lovely new building opening in 4 short years. 200,000 square feet, 10 floors. Our real estate focus here, we have about $50 billion concentrated in a couple different sectors, some of them very relevant to discussion today. And as I said before, it's our second largest exposure globally. Our biggest exposure in the UK, not necessarily relevant to today, is in logistics, so e-commerce. We own about 100 million square feet of logistics facilities. Won't touch on that today, but just to give you a sense. But when we look at innovation and what's happening in some of the other big sectors, I'm going to go through a little bit on data centers. It's a big belief right today. Life sciences, I have to touch on housing, I have to. And then flexible workspace of all things. when it comes to data centers, I mean, that is something that is a AI and everything that's happening with that. When you think about it from a real estate perspective, that is the easiest way to invest in that space. Just this summer, or in May, we announced the acquisition of a 260-acre land site up in Northumberland, so about 20 kilometers north of Newcastle. We're going to develop a 550 megawatt data center that should be delivering sometime between 2027 to 2031. These things take time. It was announced by Prime Minister Starmer, or frankly, re-announced, in New York with John Gray last month. Planning is yet to be submitted, but if done, it will successfully and fully be built out. It'll be the largest data center in Europe. It would create 1.6 thousand direct jobs, 2,700 indirect jobs, and hopefully will attract a lot of pool of capital and the global tech tenants all to a new tech hub in Northeast England. Very interesting. These things are not small investments. This would be a 10 billion pound investment to build this data center. It would be probably the largest single asset in the UK. I've been told I'm not allowed to say it's more valuable than Buckingham Palace, but at 10 billion it might be. We don't know. In terms of other infrastructure, some other stats that I think are interesting when we think about the UK, and this is something we all need to think about and do something about. The UK has the lowest rate of private investment of any G7 economy. Lowest rate. In the OECD, only Greece, Luxembourg, and Poland have lower business rates. It's pretty scary. However, we're seeing a lot of change for that, hopefully. Labor's plans for economic growth basically hinge on addressing this and try to crowd in transformational capital, which we want to be a part of, to effectively improve and massively invest in the UK infrastructure. Ourselves, we're doing that in several different areas. We're looking at the electrification of transportation, ports and supply chain resilience, decarbonization of gas networks, grid transitions, offshore wind, very big these days, and digitalization. When it comes to life sciences, again, we are, at least I am, with my focus on real estate. We have a portfolio company up in Cambridge called Biomed Realty. It's the largest owner of life science office in the US, or the second largest, excuse me, and they've developed 500,000 square feet of labs in Cambridge since 2016 that have been fully occupied, which is important, since they were developed and still are today. And we control about 1.1 million square feet of land up there, which is 62% of the new lab supply in the area. Some of the world's largest pharma companies obviously have a presence in Cambridge. AstraZeneca is doing its new headquarters up there. And the city's life science industry has grown rapidly over the last 5 years. You've actually seen 11% per annum employment increase. So it's a 70% increase in employment in Cambridge in the last 5 years. A lot of growth we're seeing clearly in the life sciences. Obviously, the University of Cambridge itself is a powerhouse, ranking only second to Harvard in terms of life science rankings, and venture capital there has grown fivefold also over the last 5 years. So a lot of investment going there. For the real estate people in the audience, vacancy there is now down to 0.3%. I don't think that stat, I don't even know how you get to that stat, but it's so low. But it's basically, there is no vacancy. And spot demand is currently 26 times the availability. So good luck trying to find new space if you want it, which has led to rental growth of over 12% per annum over the last 2 years. We, though, are, as a firm, not invested just in real estate. We actually looking at other life sciences, and we have a whole separate fund based on this. But we have a company in West London called Autolus, which has developed an advanced T-cell therapy, which treats all different forms of leukemia. And we've developed currently a 250 million pound advanced treatment center up in Stevenage in Hertfordshire for this. So not just real estate focused, but also on some of the underlying life science areas. I'd be remiss if I didn't discuss housing. I am a real estate person, I have to do that. And it was obviously one of the top two mentions yesterday as the budget. I want to contextualize some of the UK housing situation. Everyone always talks about it being a big deal, but I don't think people actually realize how big of a deal it is. Chronic undersupply of housing in this country. Only 156,000 homes were built last year. That's 16% below the level in 1980. We need 300,000 a year just to keep up with immigration and aging demographics. So since I was born, 1980, we have had a 4-decade shortfall of 48%. That is something very difficult to come back from. And that is why house prices have been gone up 6% over those 40 years. US, just to contextualize that, is 4%. When you compound that high, you almost get to a double rate of unaffordability. And when you're looking now at mortgage rates slightly coming down, but maybe not yet, we'll see, there's even a greater need for affordable housing. There's currently right now 1.2 million households, not people, households, on local government affording wait lists. That is an astonishing number, and there was only 30,000 affordable homes built last year. So housing is a huge part of something that needs to be addressed in this country. Ourselves, we've developed basically an affordable provider, something called Sage Homes. We've provided 22,000 homes, about $4 billion of value over the last couple of years. But this takes a lot of work, and it has to be a private model to do it. It's the only way to do it. But this is a good example of some place or a way in which you could deliver stable returns and deliver a public good at the same time. And it's been good for the government because it's actually an efficient way to do it for the taxpayer when you do small amounts of grants that enable development. We're looking at other things as well. And actually last summer we sold several of the units to USS. I believe somebody from here is there, or someone in the audience is from there, so thank you. Because we're trying to develop other people into the space that brings in more capital. Again, that is the important thing here, and that is one of the things I think Labor government also is seeing, is that you have to bring more capital into this space. So you can't just build it, you need to sell it so that you can rebuild and somebody else can benefit from it. Lastly, I'm going to touch on student housing. Because as I said before, education is a huge sales point for the UK. It's the second largest net export of the country. A lot of people don't realize that. Second largest net export is education. And as I said before, you have 4 of the top 10 global institutions. You also have 15% of the top 200 universities. So this is a huge selling point. From a real estate perspective, we decided to try to capitalize that on student housing. We own now about £7 billion of student housing, which makes us the largest owner, and we hope to do more of that. And then lastly, one of the areas that we see a lot in London is flexible workspace and try to create fun, young, and vibrant areas for people to secure employment and to have their jobs. We actually have one directly across the street. It's a portfolio company of ours called Fora. And just at our site in King's Cross last week, we announced, or it was announced, that OpenAI and Aria, which is the government-owned R&D, are now going to become some big tenants of ours. We think that's a very important part of trying to deliver more growth in the country. So with that, I just wanted to touch upon, just to demonstrate, as one of the world's largest investors with true scale, with true global ambitions, this is how we're seeing the UK. You named the sector, and it seems to be we have an investment in it here in this country. It is our second largest market. London remains the preeminent, truly global city in Europe. We do not see that changing in any way. And with that, we can move on.
I have a few questions. Yeah.
So Michael, thank you very, very much indeed. That was a fascinating presentation. And as you said, gloomy morning on Halloween Day, we have an American to come and give us a true boost of optimism. So let's look at what you've said, because it is very reassuring. As such an important global investor, with the infrastructure in Blackstone to consider geopolitical matters with exquisite precision and insight, you're able to look across the globe, and in particular across opportunities in Europe. You've rightly identified that at the heart of both this government and the last government's commitment was a commitment to growth. And that growth can only really be fueled by private sector investment. But you gave us one scary statistic, and that was that I think in the OECD, there are only 3 countries below us that have less private sector invested than the UK. What do you think is going to really drive even greater private sector investment, including in life sciences, in health tech, in healthcare infrastructure and real estate? And what are the issues that might stifle that? So first, what will make it happen?
Confidence, firstly. And I think there's also, I think, dare I say, a slight cultural question. We're going to talk about innovation later. And one thing I've noticed here in the UK is incredibly good. I have to use a baseball analogy, but when you're doing companies, developing the first and second inning, and developing new technology, but you take something like DeepMind, like Google, and to some of the other examples, it gets sold off too early. Google came in, and you had the Americans buy it. There's a risk tolerance here that it'd be nice to see a cultural change to increase it somehow, and to have some of those technologies not sold off at such an early age, but kept in-house and developed here. The venture capital universe here, we talk about it being very large, and it is large in the European scale, but I believe the stat is 20th the size of Silicon Valley, so 5% the size. There's got to be some way to address that and to get more inward capital here on the venture capital side. And I think a lot of that's going to have to be somewhat of a cultural change or shift. But then I think over the last 8 years have demonstrated different forms of confidence loss, Brexit, Corbyn risk, everything else, Trustonomics. The nice thing is, I think right now, we actually had an investment committee on Monday. The whole, where's the UK going over the next 5 years? It wasn't really asked. It was kind of nice. It was nice to have a committee where we didn't even have to discuss that. So I think that's something that's definitely improving.
And in terms of what you might see as the challenges, so that we can all look out for them in the way that you will be looking out for them,
yeah.
What are the potential warning signs that would suggest that things are not going in a direction that are going to drive that rapid and substantial boost to private sector investment?
I think we need to start looking at the capital flows itself, and looking at how much various sovereign wealth funds and everybody else are investing in the country. We haven't seen a lot of investment over the last 2 or 3 years. Granted, there's been a shifting interest rate environment, very different. But we'll be able to measure that very easily, I think, over the next couple of years, clearly. And as we see more people come in, and I think more people will come in. There are several warning signs that one could look for, but I have a lot of confidence that many of the investors, the large ones, the global funds, will want to be here, especially when you look at the dearth of options. And with all the geopolitical risk, US versus China, a lot of people are de-investing. This is going to be a great place to be.
We have a couple more minutes for some more questions. How are we taking questions? Are they all on Slido, or can people...
Oh.
Sorry. You're going to do that for Mrs. Marvellous. Oh dear, sorry, can I just come in here? What are we saying here? Is London competing with New York and attracting investment in life sciences? Are we competing with New York? In innovation, investment, life sciences investment?
You are competing with New York, but you're beating them. I mean, I think New York, you're definitely beating them. I think your bigger competition is California.
Right.
But are you competing with New York? You're beating New York.
Yeah. Okay, so we're beating New York. California is where to look. Any other questions? Do send them in if you like. I've got a couple more, if I may, since we have you here. So you rightly touched upon the question of real estate. We're looking at transformation of patient pathways. One of the arguments that's been recently made is that there has been a chronic underinvestment in the NHS estate in such a way that a brilliant workforce are not as productive as they could be because the environment in which they work is not properly invested and potentially wrongly configured. So one of the very interesting things that we might touch upon today is where healthcare should be delivered physically. Is it in big hospitals? Is it in smaller community centres? Is the home to be the healthcare delivery environment of the future? When you look at your real estate investments, do you look at that continuum of healthcare infrastructure?
We do, and I think, frankly, we haven't seen it as much here, but in the US, you're starting to see a lot of local providers, like shopping malls. Yep. What do you do with a big 2 million square foot shopping mall that's no longer needed when you have 5 of them in Cleveland or wherever it is? You can turn them into audience halls, you can turn them into education, and a lot of it is being turned into easier forms or smaller forms of healthcare delivery. Nothing big, not turning them into hospitals, but can you look at having people local, closer in? Clearly, there's a lot of these derelict or older shopping centers that can be repurposed in this way. And we're definitely seeing that on the US side. You don't have it as much here, just given that the retail scene never got as overbuilt, and you never had, everybody's a little bit more local and able to deliver it.
Yeah. That's very, very interesting. And so that US model might be transferable in some way to repurposing real estate in our own country. Now, there's a question here about the famous Mansion House pension declaration, where pension funds were going to be in a position to take 5% of their asset base, equity base, and invest it in technology, including life sciences. Have you seen funds flowing from those pension funds into your investment opportunities?
Not yet. I think a lot of, not yet. I think it's a good goal. I think a lot of people still, people want to talk about it, but then when actually they go to an investment committee, they don't have the risk tolerance to want to handle it quite yet. We'd like to see it there, though. We'd like to see it there.
And one last one, I think, we'll pick up on all of these questions, so please don't worry when we have our panel. But one last one to you. A question about a lack of diversity in terms of particularly female founder investment in health tech businesses. Does Blackstone have a view about driving the diversity opportunity through some of the investments it makes? It's
hugely important. I mean, you cannot... DEI, and looking at it today, one of the investments we looked at it, it's a small one. It's called January Ventures, which is a very large, it's a only female-founded business VC fund, and we're looking at many things like this that are, we have not yet invested in this entity, to be clear, but we're looking at many types of this because you have to have that diversity of views. You're just going to miss it if you only deal with white, male, and pale.
The Harley Street Health District, the home of healthcare since 1860.